Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies, and blockchains. I am your host, Chris Coney. Now there's lots of news today, and I've had to pick from many different important articles. I had to pick the most important one of the day. For example, there's one about Bitcoin.com starting their own mining pool using the Bitcoin Unlimited client. There's one about the Jax wallet adding the Litecoin, and a couple of others. But I had to pick the most important one, which I believe is this one, which is entitled China's Increasing Debt Burden Could Affect the Bitcoin Economy. Now that might not sound important on the face of it, but as we go you will see that it is very, very important. Because as the article says later on, Bitcoin does not exist in a vacuum. It is inextricably linked to the fiat money system. And any major events in the fiat money system will inevitably affect Bitcoin. If only for the reason that a lot of the companies supporting the Bitcoin network are mostly tied into the fiat money system. So we'll see as we go. According to the Bank of International Settlements credit-to-GDP gap, China could be dangerously close to a banking crisis that could threaten the future growth of the entire economy. The headline then reads, "Is China's debt-driven economy on an unsustainable path?" Well, the answer is yes, inevitably. A debt-driven economy is unsustainable by nature and is inevitably going to collapse, because the only way you're able to pay off previous debt is by creating new debt. And eventually, you run out of creditworthiness, meaning you can't borrow anymore in order to pay off yesterday's debt. And at that point, you default. And then that's where it all comes crashing down like a house of cards. And pretty much every economy around the world is now a debt-based economy. That's what fiat money is. It's debt. And you have to keep creating new debt in order to pay off the old debt. Until, like I said, you can't borrow anymore, and then it all comes crashing down. So, the Bank of International Settlements, BIS, a widely respected financial watchdog, has reported that China's credit-to-GDP gap has reached 30.1. Now I think is that 30 to 1? Well, we'll see. The credit-to-GDP gap is the difference between the credit-to-GDP ratio, which in turn is the ratio of the country's national debt to its GDP. So what that means is a GDP, gross domestic product, how many goods and services or economic value that a country creates, usually it's measured annually, and then credit, how much credit have they been issued with, how much debt do they have. So you can think about this, if you think about countries as individual people, you can get your head around this. So if my GDP would be how much I earn in a year, right? So maybe it's $50,000. So that's my GDP, if you like. And then I would have to see how much my debt was. So if I owed $50,000 and I earned $50,000 a year, well, I guess that would be a debt to GDP ratio of 1 to 1. And I owe as much as I earn in a year, which technically would mean if all I did with my salary was pay down my debt, I'll be debt free in 1 year. Of course, that's not possible because my debt is not the only expense I would have, but that you get the idea. So similarly, countries, governments borrow money, right? When they're short of cash, just like an individual. If I get a pay cut, if I lose my job, if for some reason my expenses go up and I can't pay my bills, I might borrow some money temporarily, expecting that things will correct themselves when I get a better job or get a pay increase or pay down the expense that my boiler broke or whatever. Then I'll pay off that debt and go back to normal, right? So debt is meant to be temporary by its nature. So here we go. So the article goes on to say the 30.1 credit to GDP mark is considerably higher than all other major countries, according to the BIS and the countries that they track. It is significantly higher than the gap in the Asian countries in 1997 during the region's speculative boom. It's also higher than the US subprime bubble before the Lehman Brothers crisis, which was in 2008, right? So it's saying that even China's debt bubble is bigger than the US was before what was the most significant financial crisis in our history, or certainly in my lifetime anyway. This indicator, from the work of economist Hyman Minsky, is important because it has proved to be the single biggest gauge of banking risk. It has consistently predicted financial crises, even though the expected result often takes longer than expected to materialize. So that's why I say it's inevitable, but it's not necessarily predictable, right? That's why no one who goes on the news and is an economist can actually call the specific time, date, month, or year when the financial crisis will be triggered. The system is just too complex to predict because there's so much chaos, so much randomness and so many actors, individual actors, making decisions which you can't predict. Their decisions ahead of time. You don't know what they're going to decide to do in the markets. Now it says history suggests that if a country scores a 10 or higher on this index, then it usually merits closer monitoring of the situation. Also, studies of earlier banking crises around the world over the last 60 years appear to confirm this. And this puts China's economic situation in perspective, as its score of 30.1 is more than 3 times higher than the danger threshold, which is 10. Now, when they say so if it's 30, let's say even if it's 30.1, let's just discard the 1. Let's assume it's 30 to 1, as in a ratio. Well, that means that for every $1 of GDP, there's $30 worth of debt. Now, that might sound bad, but again, let's take it back to the individual. Most individuals, if you earn $50,000, well, someone might have a $400,000 mortgage, right? Which is 8 times their annual salary. So that would put, if the mortgage was the only debt that they had, well, that would put their kind of debt to GDP ratio at 8 to 1, right? For $400,000 of debt, $50,000 a year earnings, right? And then that would be something that when you get a credit check, it's kind of something that these credit scoring companies look at, is how much debt do you already have and what's your earning potential? Because if you're already burdened by debt and you're already obligated to pay those liabilities, then it's probably not a good idea if they load you up with more debt, right? And I guess that's the definition of credit worthiness. It's not just your ability to repay, it's also the burden of debt repayments that you're already under, right? So additionally, outstanding loans in China have reached $28 trillion, as much as the commercial banking systems of the United States and Japan combined. And this is where we get onto Bitcoin's, not role in this, but how Bitcoin is affected by this. And the heading reads, Bitcoin mining operations at stake, ? China is the epicenter of Bitcoin mining, with a large majority of the network's hashing power originating from the country. Bloomberg reported that China-based miners make up as much as 70% of Bitcoin's total mining power. This does not bode well for the cryptocurrency, especially if the credit-to-GDP gap turns out to be a meaningful gauge of China's economic health. Someone once insightfully observed, right here at Bitcoin.com, that Bitcoin's economy does not exist in a vacuum. That is, it is inextricably linked to the rest of the economy. And this is because in a globalized economy, it deals with various transactions that tie it to other fiat currencies. So essentially, as long as fiat currencies exist, then Bitcoin will not be immune to booms and busts. Depending on how reliant Chinese miners are on bank credit, an economic and banking collapse could prove disastrous. Bitcoin's future is heavily dependent on China right now. So Bitcoiners shouldn't be under any illusion that the technology is unaffected by mainstream economic happenings. This is ground zero in an experiment of what could actually happen to Bitcoin if a major economic collapse occurs. And the article ends by asking, do you think a banking crisis is looming in China? What kind of impact could it have on Bitcoin? Well, we know it's inevitable, right? It's built into the very rules of the game of fiat and fractional reserve banking and a debt-based economy. You cannot stack. You can only build a house of cards so high, right? Usually the first level is reasonably stable. and a light gust of wind won't blow it over. But the higher it gets, right, once the house of cards is as tall as you, it's extremely fragile, and it takes less and less air pressure or less and less of force being acted on the house of cards for it all to come crashing down. So that's why that's why it's inevitable, and that's why the longer we go before the crisis is triggered, the less it's going to take to trigger it, right? So over time, it gets more and more likely because the resiliency of the system is eroding by the day, and eventually it'll only take a tiny, like blowing out a candle, that much breath, that much force to knock the house of cards down. So the reason why that affects Bitcoin is because miners are businesses. These industrial miners are businesses, and they pay electricity bills, they have staff, they're just like any other business. And many of them have outstanding debt because they probably took on debt to buy all of the mining hardware in the first place to get their hashing power up to standard so they could compete. Because if they'd have just used the cash that they had, they wouldn't have had enough mining power to compete in the marketplace. If there's a banking crisis, interest rates shoot up, or there's kind of a clawback on their debt or whatever, or even people that owe the miners money, right? Let's say that happens, then they may end up losing money on money that's owed to them, and then they're in big trouble. Now, in a normal business, that would make sense, but I was just thinking, the income for a Bitcoin miner comes directly from the blockchain in terms of block rewards. So it's not like they're issuing invoices that they may not get paid. So someone defaulting on their debt, that's actually not going to happen. It's more likely to affect them if they need to refinance, as in, borrow new money to pay off old debts and restructure. So like pay off 4 existing loans by taking out one bigger loan, things like that. That's quite a common practice, refinancing. And if that facility ceases to be available, or say they've got credit terms with their suppliers, meaning that they agree when they buy new mining hardware, they get it delivered and they don't have to pay it till 30 days later, right? They might rely on that 30 days in their business model. And then if their supplier can't afford to do that anymore and they chop it down to 14 days, well, then that puts the miners under a cash flow strain. And that actually puts stress on the business and so on. There's lots of factors that need balancing very carefully to run a successful business. And finance, access to credit is so important. So, and because so much mining is not centralized, but so much of the mining exists in China, all of those miners are within that economic system we just talked about, where China's banking system is a little bit shaky. But I mean, all the banking systems are shaky. It's just that the amount of debt bubble in China is so huge that if it came crashing down, it's just unfortunate that the miners are in that country, if you know what I mean, because they're going to be under that burden when it crashes. The solution, as always, is to make sure that your investment is diversified across many different asset classes, those being precious metals being one asset class, cryptocurrencies, property, paper assets like stocks, and then cash or business investments, things like that. So as long as you've got a reasonably equal spread of your wealth across those different asset classes, then no matter what happens, if one thing crashes in value, something else will go up in value and your wealth will be protected. So that's what I do. That's the timeless wisdom of The Richest Man in Babylon, if you've ever read that book. If you haven't, I definitely recommend you read it. It's not very long a book, but it's a very, very key book to read if you want to survive the economic storms that are ahead. All right, that's going to do it for today's edition of the Cryptoverse with me, Chris Coney. Thanks very much for listening today. Please go to cryptoversity.com and subscribe to the Cryptoverse. You can subscribe to the audio version on iTunes, Stitcher, or Google Play. You can subscribe to the video version on YouTube. And please, I would appreciate it if you would help support the Cryptoverse by sending us a contribution in Bitcoin directly to the address on the page, clicking upvote if you go to the Steam network and upvote this episode, Alternatively, you can check out our merchandise store, where you can buy yourself a t-shirt with the Cryptoversity branding on it, or an iPhone case, or any other one of those other products that are coming soon. And finally, if you want more structured information on Bitcoin, cryptocurrencies, and blockchains, check out the courses section where you can buy yourself an online course. Alright guys, until tomorrow and the next episode of the Cryptoverse, it's me, Chris Coney, saying bye for now.